Guys again, and this is the second recording of the day. I'm going to deal still with the Australian dollar, US dollar, because I think we have an interesting structure for this fifth wave to the downside, and I don't think that it is over here, as I already mentioned this on the previous recording made before London coming in today. So I don't think that this type of potential, let's say, double bottom is true. Why? Because the lows in the two areas, the lows here and the lows here, are kind of similar, and from my experience, they are bound to be, this kind of pattern is bound to be broken on the next attempt. So I don't think that there is, let's say, those are the lows in that area, even though the target for the fifth wave, as you can see, is somewhere between 95.94 and 94.88. I would rather see it in the neighborhood of 95 than 96. So anyways, trying to catch a bottom on such a sharp move is anyways a risky business. Markets today, as you can see, rebounded a little bit. Equities are on a tear, unbelievable equities. 129.38 for euro, 151.20 for cable, 102 for US dollar Japanese yen, and our interest for this recording 96.83 for the Australian dollar US dollar. However, I would like to take a look at this structure here a little bit more into details, and this will be the subject of this recording. So this was part of the recording I made this morning, but on this 4-hour chart, what I would like to do. So let me delete this one like this. And normally this first wave here. So this first wave here, if we have 1, 2, 3, 4, 5, you want to see if the third wave is extended. So we take a Fibonacci expansion from here, and we go from exactly the top till the end of the first wave, and then till the end of the second wave like this. And you can see that 161.8 comes at this level, and it means that the third wave is extended, so we are looking in front of our eyes at an impulsive move. What I would like to do, I would like to take a horizontal line, meaning this line here, and put it on top of the fourth wave here, as that would be my let's say top of the fourth wave as possible resistance on any move to the upside. So 1, 2, and then the structure for this first wave here would be a nice five waves impulsive move of a lower degree. So that would be something like 1, and then 2, and then the third wave to the downside, and then with a nice, so the third wave to the downside, a very nice fourth wave here, and all to end with an ending diagonal of a lower degree that makes the fifth wave here red. So 1, 2, 3, 4, 5, end of the first wave, and then second, third, fourth, and what we have now is a possible fifth wave to the downside. Now I would take this trend line from here and try to mark the recent bottoms that we had. So we had the bottoms 95, 95, around that area, okay, 95 something, and based on that, I would be inclined to think, or to say, that this fifth wave that started here, I'm looking for a possible ending diagonal in this kind of shape. So this to be the first wave. Let's make this one 12 and red and black, sorry. So this to be the first wave. Then I'm looking for a second wave like this, and this second wave would be just the so 1, 2, and then looking for a third wave. But in a third wave, so for a third wave, there should come something like this. But in a third wave, okay, in an ending diagonal, it is usual for the third wave to come in the form of a 3-wave style. So this to be, let's say, an A or a B, something like this. and a C like this. So this to be the third wave of a lower degree, so to have 1, which is already done, then the second wave, which is already done, then the third wave not done, but let's say that the third wave should come around here, then a nice bounce to the upside for the fourth wave, but the fourth wave ideally would be just a small fourth wave, probably in the 96 or just a little bit higher than the 96 or something like this to have a fourth wave. So 1, 2, 3, 4, and then the fifth wave to come to the downside like this, to go to touch and ideally to pierce this trend line. Let's change the color for this one, so let's make this one blue. So this should be the fifth wave like this. So 1, 2, 3, 4, 5, and that will mark the end of our fifth wave here. Still in the area for the target for the fifth wave. So this still is the target for the fifth wave between 0.96 and this 94 something, and that's also 61.8 out of wave A on the weekly chart, and this should be the ending diagonal structure that I'm looking at. So what we have now, we have 1, 2, possible in the makings a third wave to the downside. Because of this resembling of a double bottom, everybody sees this, so most likely it is not. The values are too close between the two, so I'm looking for a nice move back towards the point 96. Now if you go on a 1 hour chart, so let's take file in your chart, and now let's take the Australian dollar 1 hour chart and choose my template from here. Now on the 1 hour chart, if you want to take a look at this move, so this is the low for the third wave, and this is the high for the fourth wave here. So this is the third for the move to the downside, and this is the fourth for the move to the upside here. And now we are looking, from this moment of time, we are looking for this ending diagonal, and probably this is only the first wave, like I already made the case, the scenario on the 4 hour chart. So this is the one, and the second wave being here, and now looking for a move that should go lower, so that should go lower than these lows here, okay, and to be only the third wave like this, ideally like this, so this to be only the third wave, so not quite a deep retracement, but anyways, to take this low, so the move to be for the ending diagonal to be a 1, okay, then the second wave here, then looking for the third wave here to be in the form of A, B, and the C to come here, something like this for the third wave. Then ideally going back for a fourth wave, something like this, and then make another wave, the fifth wave, that should pierce this trend line, and that should be my ending diagonal scenario that I would like you to see. Now it remains very much to be seen. Normally I could have been looking for a terminally impulsive move for this one, but because of this retracement, it is not the case anymore. Now the low here is 95.96, and the low here is 95, 93. If this would have been lower than this one, then things could have stayed different. It might have implied that the third wave is already done here, but in this situation the third wave is only in the makings, and it should come with an ABC move, something like this. This to be an A. Let's change the color so not to be confused. And then a B like this, and looking for a move into this area for so A, B, C to make the third, the fourth here, and then the fifth here, red, and this should complete the fifth of this degree, and then probably will complete that C wave green that you saw on this morning analysis. But this is just a speculation with this C wave green. At this moment of time we need some confirmation to the upside, and the confirmation to the upside is after this wedge is going to be done. So after this falling wedge is going to be done, then looking for the upper part, so for the upper part of the wedge, like this one, to be broken to the upside. And we're going to look at reversal patterns like double bottoms in there, or inverted head and shoulders, or piercing patterns, or bullish engulfings, or something like this. Now waiting for New York to come in. We're going to have today in the American session the Richmond Manufacturing Index and the consumer confidence in the U.S. All eyes are on those releases because of the Fed, let's say, suggesting that they would withdraw the quantitative easing if the economy is improving. So everybody is going to look if the economy is indeed improving in the States for taking their positions. Personally, I don't think that we'll see major breakouts to the upside or reversals to the upside in the current US dollar trend until next week when we have the ECB and the non-farm payrolls, but that's a totally different story. Now the next recording is going to come after London goes home and before the New York close, and I would like to take a look at the US dollar Japanese yen for that recording. Now until then, stay safe on the market and